Hello everyone. Good morning from this part of the world. It's 9:36 a.m. local time. That's about 8:36 a.m. UTC, and I'm very excited to welcome you to our first edition of the Forex Morning Mastery for the week, and of course, the last trading day for the month of March. It has been a great week. That is the previous week, a great month for us all in this community. And for those of you who have been part of the positive news and the growth so far this year, well done and kudos to you all. So today we are going to be delving into the market as usual, where we shall be looking at three financial instruments. So we are going to be revisiting the US All Spot and then have been deliberating whether to take the GBPUSD or we continue analyzing the USDJPY. But after deep thoughts, I've decided to take on the GBP USD for this week. So, for those of you who are fans of the GBP USD, you don't want to miss out on this beautiful trading setup I have identified ahead of this week. And then we are also going to be taking on the XAUUSD, my favorite, that is the gold commodity as well, which obviously we saw this morning how price action had hit another all-time high. So we already have a very good position on the gold commodity this morning, which I will be deliberating on in a moment. So grab your favorite beverages as you do not want to miss out on this interesting session. And for those of you who are joining me for the first time, you're highly welcome on board. I'm very excited to have you join me this morning. My own name is Sheriff Daramola, and for the next 41 hour, I'm going to be your host as we shall be embarking on a trading journey, evaluating the financial market from both technical and fundamental perspective with the utmost intent of identifying potential trading opportunities. So stay tuned in as you do not want to miss out on this one, and try as much as possible to engage in the comment section. So as we prepare for this week, the US dollar, though last week gained some traction, but it appears that the aggressive tariff and recession fears, that is, the growing concerns around this recession, are pushing the US dollar lower, and investors currently worry that this factor will slow growth and force the Fed into more easing. And this has resulted into a little bit of uncertainty around the US dollar. And last week, we cannot ignore the fact that we saw some strong macro data, macroeconomic data. We saw a better than expected economic data in terms of the GDP. And we also saw signals from Fed officials giving some support to the US dollar. Now, for me, could this be a level of comfort for investors, or will investors continue to remain uncertain around the US dollar market, especially with this ongoing trade war? Now, to navigate the US dollar market this week, we are going to be looking at key events like the PCE, the non-farm payroll, which is coming up later this week. We also have the ISM manufacturing PMI coming up tomorrow. We have the ADP employment change coming up on Wednesday, initial jobless claim count on Thursday, and of course Friday we are going to be witnessing the average hourly earnings. These are major events that are likely going to be influencing the sentiment around the US dollar this week. In short, we want to be marking out the timing so that we do not we prepare ourselves for this one. So with that said here, let's dive right into the charts and let's see what we are going to be looking at today. So my first asset that we will be deliberating on today is going to be the US All Sport. And in fact, I already have a couple of buy positions running on this particular asset this morning after capturing that uptrend scenario, though I have moved my stop losses to break even on both positions as I notice a little bit of volatility in the last 10 to 15 minutes around the $69.80 level. So worst case scenario for me will be a break even if price drops from this particular area. So what are the driver of the crude oil market this week? What are we looking at to help us navigate this market before we jump into the technical details? Well, from the look of things and from fundamental factors, it is the path of least resistance for crude oil appears to be to the upside. We are talking about influences from the geopolitical tensions. We saw Donald Trump threaten secondary tariffs on buyers of Russian oil and potential military action against Iran. And this obviously has raised concerns about supply disruptions from these key producers and might likely result into increase in demand of this commodity. And from our simple economics, an increase of demand is definitely going to make price rise. Then the growing acceptance that the Federal Reserve will resume its rate cutting cycle amidst the tariff driven US economic slowdown is also dragging the US dollar to the downside. And we all know a weaker dollar makes oil cheaper for holders of other currencies, potentially boosting deep demand for this commodity. So, this for me was enough to place a buy around the structure. Besides that, I will be sharing some technical details which further confirm this. However, in as much as the potential for the upside is very high, as at this morning, we cannot ignore the negative drivers that could apply downward pressure on oil prices. I talked about this last week, the idea that the OPEC Plus group is planning to increase oil production in April. So April is just right at the corner, and this could likely continue to, and they're likely going to continue raising output in May, adding to supply to the global market, and this could serve as a counterbalance against the geopolitical tension surrounding the Russian and Iranian oil. Then the tariff concerns too is also likely going to weigh on global economic growth, potentially reducing fuel demand. As you know, mobility needs fuel consumption, and this could also act as a headwind for oil price. Now, to help us navigate this market, we need to be paying attention to the geopolitical developments, especially around Russia and Iran for this week. Any major event that's incites a sanction or military action against these countries could incite prices to the upside. We're also going to keep an eye on global economic data and trade development as they can influence demand expectations of crude oil. And then finally, the US dollar is very important. We must pay attention to the strength of the US dollar as any fluctuation can affect oil pricing and international demand. Now, let's look at how the market is digesting this information we just talked about now. What is the market doing? Are they leaning towards the uptrend, or are there any chances that price could drop further from this particular area? So my first point of contact on the US All Spot chart is the 4 hours time frame. And right here on the 4 hours time frame, after taking into account the character of price action since the beginning of this month, it is quite obvious that the market has been strongly bullish. We can see since the beginning of March, price had continued to find higher lows, and if we connect a series of higher lows here, we have this beautiful ascending trend line to work with. Now, you know how we use our trend lines, of course. As long as price remains above them, we'll continue to look out for patterns and structures that support buying ideas. Now look at how price had respected this trend line since the beginning of this month. We saw this happen here mid-month, and then we saw price break down the structure for a while, but you can see the following week price climbed back above the structure, and since the last 2 weeks price had maintained momentum above the trend line. And look at what happened last week. We saw how price closed exactly around that ascending trend line at the end of last week trading session. So prior to the beginning of the week, the question was whether or not price will respect the trend line one more time to continue the uptrend move, or will price break down that trend line to incite a sell-off. Now, to help us navigate the market around that trend line this week, I have my key level situated at the $69 level. As you can see here, this key level had played a significant role since the month of February. The later part of February, we can see it has served as both resistance and support line. Then in recent time, I'm talking about during the second half of last week, it was serving as a support line. As you can see, every attempt by sellers to break through has always been met with strong resistance from the buyers. And for me, this could be a beautiful platform that could send price climbing to the upside, especially if we consider the geopolitical tensions and the weak US dollar we are seeing right now. So with that said here, and for the fact that price was trading around the 69 and the trend line, I was looking at buying the USOILSPOT. Now let's go into the execution time frame, that is the 1 hour time frame, to see how the market reacted to this key level at the beginning of this week. So this is what I was able to come up with this morning while I was monitoring price action around the key level. Look at what we have here. We saw the week started with a strong bullish note. As you can see here, price climbed up, then found resistance at the $69.50 level. Then it dropped down, broke down both the trend line and that key level. So we have a support line for this week at the $68.90 level, which we saw price breakdown and later turned out to be a false breakdown, right? And then we have the resistance line, the first resistance line for the week at the $69.50 level. So with this structure here, it was enough for me to make a decision of buying this asset. Well, the first one here is price still remains around the trend line. We saw multiple buy pressure around the key level at the $69 area, and for the fact that price remains above the ascending trend line, I bought right here. So I bought this. Then I also added another position at the break of the $69.20 level this morning. So you can see it right at the bottom of your screen. I have two buy position totaling about 80 pips, 80 to 90 pips currently. So the first position is running with about 50 pips, 52 pips thereabout, and the second position is currently running with about 38 pips. So I have moved my stop losses on both positions to break even area, just in case price drops to the downside, to take me out of that position. So there you have it, what I'm looking at today on the USOILSPOT. I already have a buy position running. Now, for those of us who might have missed out on these buy positions, what are we going to do? Based on the current structure we have here, it is important that we exercise a lot of patience. Now, we have an engulfing bullish candle in the last hour, And the current candle we have here still has about 9 minutes left for it to close. So it's important we exercise patience and wait for this candle to close. Let's see if it's going to turn out to be a sell or sell signal or an uptrend continuation signal. So the idea around this is to see if price could retrace back into this trend line, which lines up with a $69.20 level, and the appearance of buy pressure around this area will welcome buying ideas. In fact, by the time price drops there, I will have been taken out of this current buy position at a worst case scenario break even. So if price comes back into the $69.20 level and we see buy pressure resume around that area on our lower time frame, we want to be joining an uptrend move. So from the technical structure we have here, buying the US crude oil is making a lot of sense. Now, if price does not drop into the $69.20 level and instead we see buy pressure above the resistance line, remember this is our first resistance line for the week, and if we have the situation evolve, that is price comes here and buy pressure resumes here, then we will be joining that uptrend continuation. So for me, I still strongly hold on to a bullish bias on the US crude oil at this juncture. Let's wait and see how this candle is going to close. And to help us, let's scale down into the 15 minutes time frame, right? Let's scale down into the okay. So here is it on the 15 minutes time frame. Let's just hold on. Let's wait for continued buy pressure. So we're seeing signs of buy pressure right now. This candle has about 7 minutes left. I'm considering risking a buy around this area, and that is only if you can afford to take a 50-55 pips move around this area. But if you can't, just hold on for price dropping into the $69.20 level. But if buy pressure persists here, maybe for about 2 hours, 3 hours, sellers continue to find it difficult to break down, then we can place a buy from this area to continue the uptrend scenario. So that is what I'm looking at on the US crude oil this morning, following the geopolitical tensions and the current weak US dollar. The path of least resistance remains to the upside. But if market participants beginning to factor into their decision making the OPEC plus production increase and trade tariff concerns as regards to the economic growth, we may see selling pressure resume. And if that happens, where do we think is most reasonable to start considering selling? Well, based on the current structure here, I will rather want to see price action break down my key level at the $69 area before I can start considering selling the US crude oil. So I will want to see price break down the key level at the $69 area. And one interesting thing about that is if price can break down that key level, price would also be below that ascending trend line that has been supporting the bullish momentum since the beginning of this week, as you can see. So if price drops below the structure, then I want to start considering selling, but I will not jump into a sell right away. I will wait for confirmations like retest of structure, continuous selling pressure below the descending trend line. Then I can place a sell stop order below the $69 area. Now, there is a caveat to this sell expectations. Now, if price drops and continues to the downside, please note that as soon as price gets close to the second ascending trend line, kindly move all stop losses on sell positions to a worst case scenario break even. So while the reason why I'm saying that is this trend line here could still serve as a platform that could send price climbing to the upside. So immediately price gets close to the trend line, move all stop losses, secure the current sell position, while we monitor price action around our trend line. If we see any form of double bottom structure resume here, it could welcome buying ideas. But if price breaks down the trend line and retest it, it could welcome another sell position. So that is basically what we are going to be looking at around the structure today. Though from a sentimental standpoint, I doubt if price will break down that trend line at least today. But if it does, let's be prepared to capitalize on that move. So that is my simple view on the US crude oil for today. If you have any questions, feel free to let me know in the comment section. So like I said, I have moved my stop losses to break even. For those who missed out on this one, let's exercise patience and wait for price to come, retest any of the structures we have identified here. So that is my simple view on the US crude oil. If you have any questions, feel free to let me know in the comment section. So I will take about 5-10 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned. All right. So I guess we are all on the same page. Hope you've duly marked out the structures accordingly. They're going to be playing a significant role. Most importantly is that trend line. As long as price remains above that trend line, we will be maintaining our bullish bias here. So I want to wish us all the best of luck on the US crude oil. So moving on to the next asset on our watch list. So the next asset on our watch list for this week is the GBPUSD. So this is going to be the first time we will be deliberating on the GBPUSD this year, I think. This is the first time we are deliberating on the GBPUSD, and this is coming after much a deeper contemplation around this the both market. You know, we have been looking at the USDJPY since the beginning of the year, but I noticed that in the last 1 week the market has been a little bit indecisive, as there has been uncertainty around whether the Bank of Japan will increase interest rate or not, and then the US dollar has been struggling, and there is really no major factor that could drive the assets against each other strongly. So I decided to take on the GBPUSD. One of the reasons why I'm looking at the GBPUSD is because of the fact that if you look at the structure on the daily time frame, you will have noticed that the last 3 weeks saw the GBPUSD go through a consolidation phase. And for me, I think the consolidation we're seeing in the last 3 weeks is gradually maturing into a potential breakout or breakdown. I think this week might be the most appropriate time we start considering trading the GBPUSD. And there are other factors around the GBPUSD which also makes it promising. From the UK, we saw strong economic data from the UK last week, a strong UK retail sales data. We saw the retail sales rose by 1% in February, beating market expectation and supporting the upward trajectory of the pound sterling. Then, besides that, this also provides hope for a turnaround in the UK economic sentiment. Though this week there are no major impactful events from the United Kingdom, as you can see here on the economic calendar, no serious major event at all from the UK. The only major event that we can look at is the Bank of England's um, um, speech, Bank of England external member speech, that is Megan Green, which is going to be happening tomorrow morning. And of course, market participants will want to hear the narrative to understand what the Bank of England officials, their perspective to the current economic outlook of the UK economic docket. So this is the only one. So it looks as if the pound sterling will be at the mercy of US economic event for this week. But from a sentimental perspective, I think we are on the verge of a big move. We are on the verge of a breakout or breakdown at this juncture. Now, in as much as my sentiment is supporting an uptrend scenario, of course, based on the improved UK economic sentiment. There are some other factors that needs to be also taken into consideration, which could also negate the potential of the uptrend scenario around the structure. So we are talking about Trump's 25% tariff on imported cars, trucks, steels, and aluminium, which is expected to hurt the US economic growth and ignite inflation, dragging the US dollar lower, which is going to be a supporting factor for the pound sterling. Then recession fears in the US is also elevated at this point. In fact, majority are looking at up to 40% probability of recession risk in the United States due to aggressive US policies, which is weighing on the US dollar currently. So for me, I strongly believe that the path of least resistance for the GBPUSD remains to the upside. So I want to share with you what my sentiments are before we go into the technical details that will reveal how market participants are digesting this information. Now let's go into the chart and see what the market are thinking about the current economic development. So on the daily time frame here, after considering the character of price action since the beginning of this year, it is quite obvious that the market has been strongly bullish. As you can see, price had consistently found higher lows, right? And if we connect them, we can see we have a beautiful ascending trend line to work with. And you know how we use our trend lines. As long as price remains above them, we'll continue to look out for buying opportunities. Now look at what happened the last time price tested the trend line was in February, and then look at the consolidation phase. Continuing, we have a range bound structure between the 1.30150 and the 1.2880 in the last 3 to 4 weeks, and we could see a situation where price could test the trend line and continue the uptrend move, or even begin the uptrend from this area and then snap the highest point at it 1.30150 to continue that uptrend scenario. Now, while I look at the possibilities of an uptrend, remember what we do here. We also try to keep tabs of potentials that sellers can also come in. Remember, we have very significant event from the United States this week, the ISM manufacturing PMI, where there is an expectation that is likely going to drop. We have the ADP employment change. We have the initial jobless claim count. We also have the ISM services PMI the average hourly earnings, and the non-farm payroll report. So this week is jam-packed with a lot of impactful events from the United States, which could maybe bring in some favor for the US dollar. So I will also take into account the potential that this ascending trend line could be breached and broken to the downside. If it does, a retest of structure could incite a downturn. Now, with that said here, let's scale down into the 4 hours time frame. I have a beautiful structure there that will be helping us navigate this current market dynamic. So here we have it here. So on the 4 hours time frame, this is what I am looking at. So after looking at the character of price action in the last 2 weeks, you can see we have a descending channel. So let me connect that so you can see we have the resistance line of the descending channel right here, and then we have the support line of the descending channel right here. And look at what happened on Thursday of last week. We saw price break out of the resistance line of the descending channel, came back to retest the structure, and it's looking as if price want to use that resistance line as a platform to continue that uptrend move. And to help me navigate this area, I have my key level at the 1.29250, which beautifully lines up with that resistance line of the descending channel. So as long as price remains above these two structures, so I'm talking about the resistance line of the descending channel and the key level at the 1.29250, I will be maintaining a bullish bias. Now, if you look at the bottom of your screen, you can see I already have a buy position triggered around the 1.29422 area, though it is currently running in a loss of about 1 pips, I think, 1 pips loss at the moment. So I'm buying here, and if you are yet to buy, I think it's quite reasonable to buy around the structure and of course give enough breathing space for price to move around. So we may likely see some choppy market conditions or volatile movement as the anticipation of the economic event from the US draws near. So in that regard, I want to be having a wide range of stop loss. So I'm looking at about 50 pips of stop loss here, where my stop loss is below that support line of that range bound structure we identified on the daily time frame. So we want to give enough room. So even if price drops to as far as coming to retest the structure, the trend line here, I'm still going to be in the market to be part of that uptrend scenario. So placing a buy around this area is looking very reasonable, and we could be thinking of adding more buy if price continues to find new structures during the course of the week. Now, in as much as I am maintaining a bullish bias on this asset, the only condition that will make me sell the GBPUSD is for price to drop back below the resistance line of this descending channel. And in fact, by the time price drops below the resistance line of that descending channel, we will have seen price break down the support line of that range bound structure we identified on the daily time frame. So I want to see price breakdown, and I'm not just going to be selling the breakdown right away. And the reason is basically because this 1.28800 level, that is the support line, had played a significant role in negating selling pressure. Let's scale to the daily time frame quickly and see. You can see the last 3 to 4 weeks, we saw how the 1.288 had become difficult for sellers to break through. So we are not going to be jumping into a sell right away. We would like to wait to see that the breakdown is a true breakdown. And what are we going to be looking out for? We want to see price breakdown, retest the structure where continuous selling pressure below the 1.28800 area will be a good confirmation that sellers are getting stronger, welcoming selling ideas. However, we could see selling opportunities before that breakdown happened, but let's talk about that when we scale down into the execution time frame, which is the 1 hour time frame. So let's see how the market has been playing out around this key level since this new week began. Now, since the week began, the market has been consolidating actually. As you can see, the last 12 hours have seen price confined within the 1.29720 and that key level at the 1.29250 area, emphasizing the prevailing uncertainty in the market at this point in time. Of course, major key players may want to be stepping aside, which is quite understandable as they look forward to this major event this week before making any aggressive bets. So it is very likely we see extended sideways trading activities during the first half of the week, which is very likely. And this is why I said earlier that we must have a wide room of stop loss to capture any form of volatility that may happen around this area. So we have a range bound structure actually, and you know how we use our range bound structure. As long as price remains within them, we want to exercise patience and wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Now, if you look at what has been going on here, I have a descending trend line here. It's a very thin one, just right here, as you can see, and we saw what happened this morning. We saw price break out this trend line, and it appears price is coming back to retest the structure. Then the last 1.5 hours I've seen price retested the structure. So could this be a platform that will send price breaking out of the resistance line for this week? So if you are yet to buy, I bought around this area actually. So if you are yet to buy, you can have a buy anywhere around here, and of course give enough breathing space for price to move around as we have a structure to mark out. So anywhere above the 1.29450 could welcome buying ideas. Then we could add more position at the breakout of the 1.29720. So what I will do now is to place my buy stop order above the 1.29720 right away, so I do not forget. So I will be placing my buy stop order right now. So give me a moment. Let me place a buy stop order above the 1.29720. I just did that right now. And let's see if the price will respect the structure. Like I said, I have a buy position around this area already, which is currently running a loss of about 5 pips, I think. And I still strongly hope that this uptrend will become valid anytime soon. So I maintain a bullish bias on the GBPUSD, and I'm looking to add more buy position at the breakout of the resistance line at the 1.29720 level. Now to sell the GBPUSD, I told you earlier that we want to see price break down the 1.28800 level before we jump into a sell. So I think I will maintain that idea. I will not be selling below this key level at this point. I don't think it's reasonable for me to join a sell here. So I'm not selling. So I take this one out. I'm not selling there. Okay, let me put my sell signal here at the breakdown retest of the 1.28. So all of this area above the resistance line of the descending channel is looking like buyer's territory for me. So let's look out for buying ideas around the GBPUSD. But if price drops below the structure, we could look out for selling ideas below the 1.28800 level. So please take note of that. So there you have it, my simple view into the GBPUSD. This is the first time we are trading this year, so let's be hopeful that we capture some big moves this week. So there you have it. If you have any questions or you need some further clarifications, feel free to let me know in the comment section. And I see that we are not clicking on that like button. Please help us click on the like button. If you have found this content helpful and useful in making your independent trading decisions, why not support the channel by giving the video a thumbs up? Let's make the number of like tally with the number of people on board, and thank you very much as you do so. So let's take about 5-10 seconds off. Let's see if there are any questions before we move on to the final asset on our watch list for this week. Stay tuned in. All right, so in the absence of none, let's assume that we are all on the same page, right? So I maintain a bullish bias on the GBPUSD I mentioned. So let's see how price plays out. If there is anything new, I will be updating us on my Telegram platform. Trust me. So with that said, I wish us all the best of luck. Let's move right into the final assets on our watch list for this week. So the final asset on our watch list for this week is my favorite amongst them, and that is the XAUUSD, popularly known as the gold spot. And in fact, just the first day of the week, I'm already running with over 480 pips in profits on this particular asset, as I bought this asset right at the open of the market, as you can see, and we can see price had moved. Gold price have surged past the $3,100 barrier, reaching another record high at the $3,127.50 level just right here. And the last 3 to 4 hours, we've seen consistent rejections, as buyers are finding it difficult to break through that particular area. So this is my technical structure on our execution time frame for this week. I'm not going to be going into the higher time frame. I already did that. I shared a video on the gold market analysis during the weekend. I hope you saw it. I shared it on my YouTube, Telegram, and of course TradingView platform. If you're yet to see it, please go ahead and watch that video to have a deep background into how we got to this point. So on the 1 hour time frame, this is what I saw this morning. We had an initial range bound structure. Price dropped into the 3076-ish before it began that momentum, as you can see here. So for those of us who had bought and capitalize on this uptrend, it is high time you want to be moving your stop losses, as the last 3 hours have seen buyers find it difficult to break out that highest point. So I have moved my stop loss. I moved my stop loss to 3112.50. I think somewhere around here. This is where I moved my stop losses to, giving enough room for price action to move around, of course. So I'm looking at the possibility, since price had broken out of the resistant line of this range bound structure, we may likely see price come back to retest the structure. It may likely come back into retesting and then continue the trend to the upside. It's very, very possible. So let's ensure to secure the current position, as sellers could come in at any point in time. Now, for those who are looking at trading the gold commodity as a day trader or short-term perspective, I have a simple structure on the 15 minutes time frame. So I want to show you what I'm looking at on the 15 minutes time frame to capitalize on this continuation. That is, if you had missed out on that bullish move. So we have an ascending trend line. In fact, we have a couple of them here. And like I said, the last 3 to 4 hours I've seen price do a consolidation around the record high area, giving us a range bound structure. As you can see, price is currently confined within the 3,125 and the 3,115, and within this range bound structure you will have noticed an uptrend continuation pattern. So it's looking like a what is it called again, an ascending channel. So I will just give you a visual representation of what I'm talking about. So we have the impulsive leg all the way up, then we have the resistant line here, and then we have a series of high and lows. So you can see it's looking like an ascending channel, which theoretically is considered to be a strong uptrend continuation pattern. And for us to see a validation of this uptrend continuation pattern, we want to see price break out the resistance line at the 3,125 to confirm that we are truly going to the upside. So with that regard, I think I can afford to risk some of the profit I had made so far today around this area. So I will place a buy stop order above the 3,125 area just right away. So let me do that right now. So I'll place a buy stop order there. So I just did that, and then stop loss will be somewhere below the 3,120 on that one. And I'll do that right now. So let's see how it's going to play out around this area. So I can afford to risk something here. Now that is what I'm looking at to continue the uptrend on the XAUUSD. So for those of you who had missed out on this early surge, we could look at a breakout retest of the 3,125 to continue the uptrend move. However, if it so happens that buyers are finding it difficult to break out of that resistance line, then we could be seeing some profit taking activity happen, which is usually peculiar with uncharted territory, as it usually takes a while before market participants get used to this price level. So out of fear of missing out, we could see profit taking activities happen, resulting in a retracement move to the downside. And if we also consider today being the last trading day of the month, it is a custom that traders, investors reposition themselves for the new month, and this could incite selling pressure in this market, especially around uncharted territory that we have here. So for me, to continue a sell, to join a sell from here, I would love to see this ascending trend line broken to the downside, this one right here, and look at how beautifully it lines up with the support line of that range bound structure we talked about earlier. So if price can break down and retest the structure, then I want to be joining a sell, then have your stop losses way close to the support line here, and let's see how far this is going to go. So that is basically what I am looking at on the XAUUSD today. We have a simple range bound structure here on the 15 minutes time frame, so we are open to both bullish and bearish expectations around the structure. So there you have it, my in-depth look at the XAUUSD, and don't forget to give the video a thumbs up, right? And I see your comment, Ruth Citorus. Is the price, she says, is the price okay? I just talked about that. She's asking if the price will continue or it will retrace back down. Of course, we do not know. No one knows if the price will continue the uptrend or it will retrace, but we could find a hedge in trying to understand the behavioral patterns of market participants using our technical structures, which we have identified here. Now, one important thing we have noticed here at the all-time record high is the market is going through a consolidation phase. And what does a consolidation phase tells us? It tells us that there is an indecision in the market where sellers and buyers are negotiating whether to continue or start taking profits. So with this range bound structure here, we have no other choice than to wait patiently to see for a signal which will come in the form of either a breakout of the resistance line to give us buying ideas, or the breakdown of the support line to give us selling ideas. So that is basically what we are looking at here on the XAUUSD. I hope I made myself very clear there. Ruth, please let me know if you still need some clarifications to this. So we are here to click on the like button. Let's click on the like button. We have over 7 people on board. Let's click on the like button, support the community, and continue to inspire me to do more of this. So click on that like button and support the community as well. Thank you very much as you do so. And for those of you who had clicked on the like button, I really appreciate your support. Thank you very much. So let's see if there are any further questions before we start rounding off on today's Forex Morning Mastery. See you in about 5-10 seconds from now. Cheers. All right. I saw your. Okay, you're very much welcome, Roots. I'm glad you found that explanatory enough. So I wish you the best of luck today on the gold. So I think it's on this note we have come to the end of today's Forex Morning Mastery. It has been a great moment with you. In fact, we've started the week on a very strong positive note, making over 400 pips at the start of the week. We hope that this will just be a platform for more gains this week. So I wish us all the best of luck. So today we were able to run through 3 of the assets we are looking at for this week. We newly introduced the GBPUSD to our watch list. Hopefully we see something big on that one today. This week, sorry. And then we have the USOILSPOT and the XAUUSD, where we have identified simple trading opportunities to help us navigate the market for the first half of the week. And I do hope you all marked out the structures accordingly as we have illustrated. If you have done so, well done, kudos to you. All we just need to do is exercise patience and allow the structures to mature. And always remember that every decision we make in the financial market is more or less an educated guess. So with this understanding in mind, let's ensure to have a well-defined risk management strategy in place. And for those of you who joined us for the first time, I do hope you were able to gain 1 or 2 things from what we have discussed here today. If you did, you want to be part of our subsequent editions. The more time you spend with us, the better you get to comprehend our analytical approach. So I look forward to seeing you again on Wednesday, same time, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review how well these assets have done so far, and of course prepare for the second half of the week. So I wish us all the best of luck. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.